What's up guys, Dirk here. It is a bloody Friday. As you can see, most of the crypto market is red. Stock market is red. We still have a couple of hours to go before the New York Stock Exchange closes, but I wanted to make this video with my thoughts on what is happening in the market today, and I want to share with you how it was actually possible to start anticipating this drop in advance. So let's take it step by step. Let me walk you through the charts, show you what happened and how you can use the charts and certain indicators to be able to give you a better idea about the direction of future movements. If you're new to the channel, welcome. Make sure you subscribe down below, smash the like button, please. It helps me a lot, gets the video out to more people, then I can continue to make more videos and help more people. So smash the like button, subscribe down below, and let's dive straight into it. Okay, so let's start out by looking at Bitcoin. Let me try and break this down for you a little bit to help you understand what happened. So we're currently at 16,800. We've had a big sell-off after what was a pump that many people thought that was a bullish continuation. Things were looking kind of good, but I warned about this already, where this could just be a squeeze. So before I break down what happened over here, let me share with you, I actually made this video. You can see over here, I uploaded this 3 weeks ago. I said the Bitcoin short-term update, bullish target $18,000. And I'm not going to go into it now, but in this video, I will link to it in the description down below. You can see it, it's on the channel. In this video, I explained that there was possibility for a short squeeze where we would run these previous highs at about $18,000. And at that point, we'd have to see if we get rejected there, it would be bearish and new lows could be possible. And if we see continuation, of course, we would take it one step at a time. And the bullish continuation sign would be for us to be able to reclaim the 3-day 50 moving average, which is currently about $19,800. So as you can see, that is pretty much exactly what happened. You can see it went to 18,400. But the key is what really happened and why this was predictable is that this pattern happens quite regularly in the crypto markets. The market has been breaking down throughout the last year in this bearish trend, and then we create these lower highs as it's moving lower and lower. And what happens is that people short the market with the expectation of continuation there. So as this market continues to chop sideways and it's going like this, people are all betting on more downside and they place their stops above these previous highs. That is typically what retail traders tend to do, especially when they're working with high leverage. They think, oh, I'm going to take a short here and I put my stop above here and it's safe. Some people really try and play it safe and they put their stops just above this previous high, thinking if they short here for a breakdown and they put a stop there, that they're going to be safe. And you can go back in these markets and see what happens. Many times this type of pattern sucks in the shorts. It keeps hanging around these levels and it keeps testing enough times to keep people thinking that we're going to break down, but we don't. And then we get a nice short squeeze that in one go takes out all these different highs over here. And then eventually we want to take out this wick high over here that we created, which indeed happened. It took a longer time. Yeah, you can see it took like 3 weeks eventually from when I made that video until we got that move up. But you can see we finally got that wick on the 4-hour. We went above here. So any stops that were over here, just above that, they got taken out and then we sold off. We got rejected. And you can see now the path is to the downside and potentially we could be setting in new lows in the next week or two. That is still a possibility that we have to keep on the table. And in my opinion, still, like I've been saying on the channel for weeks, probably the last couple of months, we cannot turn bullish yet until we get a confirmation of a reclaim above the 3-day 50 moving average, which is 19,800 at this point in time. So until we get back above there, any moves to the upside could just be fake outs that continue getting sold off until we get the final bottom. So hopefully this is interesting for you. You have to learn this pattern because it happens over and over. Also to the reverse in a bull market, of course. But this is really the game of the markets, however you want to call it. If you want to call it manipulation, it's market makers, whoever whales playing these games with retail traders, whatever you want to call it, this pattern happens over and over. And when you see enough people get sucked in who are shorting, we first get a squeeze to the upside, take out all the shorts, and then we get a sharp drop, continuation of the trend, to take out everyone that was betting long. And of course, there are a lot of retail traders and obviously a lot of quote-unquote influencers on YouTube and social media, who get incredibly bullish towards these wicks to the upside because they think, oh, it's a breakout and we are going to continue and we're going to moon. Obviously, that is not the case, but anyone who is longing this at these tops and even encouraging their followers to get long on these trades, making these crazy YouTube videos about it, like, oh, we're going to the moon, long this, they obviously get wrecked on the subsequent drop right after. So I just wanted to turn the chart to weekly here. Now, of course, the crypto market is open 24/7, so we don't get a weekly candle close until Monday, when I will do a new update on the channel. So be sure to be subscribed to the channel to get those updates. And of course, smash the like button if you haven't done so already. But you can see right now, this candle does not look great. We got rejected from the breakdown level over here, which was also the horizontal level. It was the all-time high in 2017, which you can see we sat on for months. We broke down below it. Now we retested it from below, and getting rejected here is not a good sign for the bulls. Now we still have more than 48 hours at this point in time when I'm recording this for this candle to potentially turn around. But what we're seeing in the markets, the stock markets are down in a big way. You can see the SPX is down 1.5%. It looks like it's going to get a big weekly close to the downside. And these markets, they don't look like they're going to reverse in the next 48 hours. But, anything can happen. Let's see on Monday how that turns out. But if we get rejected here, there is still possibility for continuation to the downside. And as I've been saying for weeks, maybe months already, I think, that I talked about this fair value gap at the $12,000 level. That is still potentially in play, especially if we get rejected here from this breakdown level. You can see there's a lot more support over here rather than here in the middle of nowhere where we bounce from temporarily. So if the markets continue to sell off, if there's more panic, if there's more FUD, if anything happens with more exchanges, if there's any more bankruptcies, who knows what's happening, that could send us to new lows and potentially down to that $12,000 level. So maybe the bottom is not yet in. We will have to wait and see how this develops. For me personally, again, like I said, I will only start considering turning bullish once we reclaim the 3-day 50 moving average, currently at 19,800. Until then, there is still a risk for more sell-off and potentially new lows, potentially even this $12,000 level with this weekly fair value gap. So let's see how this continues to develop. I will make an update on Monday after we get that weekly close to share my thoughts on that and see what happens. So be prepared for potentially more downside. If it doesn't happen, okay, that's great. Have a plan. Either way, what are you going to do if it continues to go down? What are you going to do if we get bullish confirmation? As always, the most important thing is risk management. Do not overextend. Have a plan. Know where you get in, know where you get out. And for the rest, there's no need to stress about it because the market is just going to do what it's going to do. It goes down until the trend is finished, then it reverses and starts a new trend. Now let's have a look at Ethereum, because this was a very, very textbook breakdown pattern that happened that was able to be spotted. And I actually shared this on Twitter right before that very breakdown as I actually spotted this pattern. So you can see I uploaded this here on Twitter. I will link to it down below in the description. You can check it out. I uploaded it here at this point in time where I drew this wedge. I drew that it was under this horizontal level and it was about to break down. If it breaks down, I said rising wedge, and typical textbook pattern, a rising wedge usually leads to downside breakdowns and downside continuation in a bearish trend. And I said the bulls need to hold here or ... And you can see the direction of typically what happens when this rising wedge breaks down. So that is exactly indeed what happened from this exact point when I posted it. It was actually literally like minutes later after I posted. Just got this big candle breakdown, and you can see so far where it has gone. And potentially I do expect this to continue to go lower. Maybe not in one go. Okay, it rarely ever goes direct in one straight move. We get bounces, maybe we get a counter trend rally, maybe we get even a reversal. Who knows? We'll have to take it level to level, and on the shorter time frames we keep an eye on that. Obviously I do that inside the VIP Discord, so if you want to become a member, click the second link in the description down below and you can keep up to date with real-time updates and stuff like that. But what I want to share with you is this was a technical classic TA pattern of a rising wedge, a break of the wedge over here led to large downside. That is really how it works, and this was identifiable before the time. So I'm sharing this with you to help teach you that TA works, and it can make you a lot of money. It can save you a lot of money at the same time too, right? If you know this pattern, it can prevent you from going long right over here before it drops. It can also even potentially allow you to short the markets and profit from a breakdown, and it just allows you to understand the market better. And obviously these patterns happen on different time frames, right? If they happen on a 5-minute time frame, obviously the move is much smaller percentage wise as it would be on a 4-hourly chart or a daily chart or a weekly chart. And understanding these patterns and understanding how to read the charts will allow you to make much better entry and exit decisions, not only for trades but also for longer term investments, for buy and hold investments. It gives you a better idea of the trends of markets and potential directions. It's never a guarantee. There's no such thing as 100% certainty, but it allows you to make higher probability predictions on the direction of trends. And as you can see over here, this was 100% textbook rising wedge, break of the wedge followed by more downside. And what it allows you to do here, for example, when you identify this, it allows you to take potentially a short position where you have a very tight invalidation. So if it doesn't break down and gets back inside the wedge, you know that maybe it's not going to break down, maybe it continues to the top of the wedge. So you can take a very small loss if you're wrong, but in the case that you're right and it breaks down, then you can have a big gain. So what we always do with trading is we measure it in terms of risk reward, in terms of R, so 1R. So 1R is 1%. So you basically risk 1% of the trading account to be able to make 3%, 5%, maybe even 10% or more. And basically how that works very simply, to give you an example at this point, you could have taken a short position over here with a stop just above my red box over here. So that would be the invalidation. So if it went up and it went back above the box here and into the wedge, and it would have continued going up, take a small loss, which is 1% of the trading account. And obviously you work out the position size depending on the trading account and on the stop loss. But in case you're right, and let's say it goes all the way back down, you can see if you're wrong, you would take a 1% loss. But if you're right, and it does indeed go all the way down here, which it hasn't done yet, but let's say it does, that is a 13R, a 13% gain. So it's a 1 to 13 risk reward. It's an incredible setup like this. And obviously even just now, you can see it already hit a 1 to, let's just say almost 7 over here. You can see. So this was an incredible trade that was predictable in advance based on textbook technical analysis, where there was potential for a 1 to 3, 1 to 5, 1 to 7, maybe even 1 to 13 or more as a risk reward. And you know, this is the really the benefits of being able to understand how these charts work to create these high probability setups. Combine that with good risk management, so only risking 1% when wrong and looking for at least 3% or more when right. And if you can do that consistently over and over, and your analysis is good, and you're right more than 50% of the time, you can make good money in these markets, whether the market goes up or whether it goes down. And I think 2023 is going to be much more of a trader's market, where the last 12 years of bull market, where it's up only and you can just buy and hold, and every year or 2 or 3 years it just continues going higher. That strategy may not be as applicable anymore. I do think we still get another crypto bull market in the next few years, but I do think it's going to be much more beneficial to learn how to trade so that you can take these positions in and out. And you don't have to day trade necessarily. You don't need to trade on low time frames. You can trade on daily or weekly time frames and take swing trades, meaning you hold a position for days or weeks. But of course, if you want, you can also day trade and hold it for minutes or hours. Either way, if you know how to trade, I think 2023 is going to be a very, very good year for traders, both being able to make money in the upside and the downside if you have a strategy, if you have risk management, and you understand which setups to look for. Just switching over to the weekly real quick. Like I said, on Mondays, update last Monday, this Monday in this week. As long as price of Ethereum is under that 200-week moving average, there is risk of downside. And in my opinion, I think we are going to at least retest the June lows for Ethereum before the bottom of the bear market is in, and potentially new lows for Ethereum. And the reason for that is also that I said that Bitcoin has already traded below the June lows. Ethereum has not yet, and I think Ethereum is lagging. That is my guess. So that means it needs to catch up and at least retest the lows, or potentially even go lower than that. And that is especially the case if we are below the 200-week moving average. So until we get a reclaim, until we get a weekly candle close back above the 200-week moving average, the risk is to the downside, in my opinion, and there could still be new lows coming in Ethereum. I hope you enjoyed this video and that you found it educational. If you did and you want me to make more of these types of videos, let me know in the comments below. What is it that you'd like me to make videos of? More technical trading, setups, breakdowns, or exactly like this video that I made here? Let me know in the comments below. Subscribe to the channel if you haven't done so. Smash the thumbs up button to help this video get out to more people so they can benefit from it and start making more profits from these markets. And if you want to continue learning from me, I have a complete VIP membership. I have a trading course where I break down my strategies, how to read charts, all of that kind of stuff. We have a premium Discord group where I'm in there every day sharing charts and insights. The second link in the description down below, click that and you'll get all the details and you'll be able to join us. 60-day money back guarantee, so it is risk-free to join. Come and hang out with us, come and learn. And if you're happy, you stay. If you're not happy, you can get a full refund, no strings attached. Thanks for watching, stay safe, manage your risk, and I will see you in the next video.